The number one most underrated tool when it comes to becoming a profitable trader is so mind-blowingly simple and yet profitable. But even after 25 years of trading, I always wonder why not more trading beginners use it. I'm talking about chart areas of support and resistance. And on this video, I want to show you how you can identify and use them to find super profitable trading setups that will help you to already become more profitable than 95% of the other traders out there. All with the help of static and flexible levels of support and resistance and the power of confluence. Hi, my name is Dirk and I've been a trader for 25 years. My goal with this channel is to teach you how to approach trading on a more professional level, so you can also one day escape the treadmill of working 40 hours a week in a job and for a boss you do not like. If you want to watch more videos like this one, consider leaving me a like and subscribing to this channel. I will publish a new video on trading every week. Have you ever noticed when looking at the charts of your favorite assets how there are sometimes certain levels where the price always seems to bounce off and has a hard time to overcome? In technical analysis, these areas are called support and resistance levels. Support meaning that at these levels market participants seem to be willing to buy more again, and resistance meaning that at these levels market participants are willing to sell more. You will find these levels of support and resistance very often around even prices, or prices that have a lot of significance for other traders looking at these markets. For example, the price of $20,000 or $30,000 for Bitcoin, or Bitcoin's all-time record price at $69,000. However, if you take a chart of any asset that you like to trade and go through it from top to bottom, you will see that it is actually quite easy to identify these areas. I highly recommend that you use a daily chart for this, by the way. These horizontal lines of where I have identified levels of support or resistance I call static levels, because they never change no matter what the price is doing. Contrary to the static levels, flexible levels of support and resistance can actually change depending on what the price of an asset is doing. You can identify these levels with the help of so-called moving averages. I usually like to work with simple 100 days and 200 days moving averages, but you can also consider other lengths or even other calculation methods such as exponential or weighted moving averages. It is important to find something here that appeals to your eye and method of viewing the markets. You can see how prices sometimes will stall when approaching one of these moving averages and only rarely push through one without the price taking a break first. It would be now, of course, much too simple to translate these static and flexible areas into a trading strategy such as buy when the price touches a support or sell when the price touches a resistance. You probably would end up losing money, so we need to go one step further to separate the potentially profitable trading setups from the ones that will cost us money. Here another simple yet extremely powerful concept comes in play: confluence levels. Confluence levels are areas where static and flexible levels of support and resistance are aligning. The more they are aligning, the more powerful the area becomes. Let's look at a recent example of this on the daily Bitcoin US dollar chart. Notice how the 100 days moving average, the yellow line, the 200 days moving average, the red line, and the resistance level at $28,500 are aligning in a rather small area. This is a great real-life example of an area of confluence. Look at how the price of Bitcoin was up to now always rejected and how selling pressure drove the price down over and over again. This is a very typical behavior for an area of confluence. I took this short trade when the 100 days moving average and 200 days moving average started moving in close to each other, because I was quite certain that the price of Bitcoin would have a very hard time to overcome this level immediately. One more thing that made the trade attractive for me was that it also made sense from the viewpoint of risk and reward. With a stop loss at 29,000 US dollars and a take profit price target of 26,000 US dollars, I only had to risk 1,000 US dollars per Bitcoin to earn 2,000 US dollars per Bitcoin. A risk reward ratio of 1 to 2, meaning that I only need to win 1 out of every 3 trades to break even. I talked about the concepts of risk and reward in more detail on my video about the worst mistakes beginner traders tend to make. You can find a link to it up here. Another tool that you can use to find even more powerful areas of confluence are the so-called Fibonacci Retracement. In a nutshell, Fibonacci retracement levels, stemming from the so-called Fibonacci sequence, are horizontal lines that indicate where support and resistance are likely to occur. Each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. The Fibonacci retracement levels are 23.6%, 38.2%, 61.8% and 78.6%. While not officially a Fibonacci retracement, 50% is also used. For our example, I used TradingView to draw the Fibonacci retracements from the all-time high at 69,000 US dollars to the bear market low at 15,500 US dollars, and saw that the 23.6% Fibonacci retracement actually aligned almost perfectly with our resistance zone of confluence, thus adding to the likelihood of Bitcoin having difficulties of overcoming this price area immediately. I think that you've seen how the concept of static and flexible support and resistance levels, together with finding confluence, can be a very powerful tool to finding great trading opportunities. If you apply this concept to, for example, 5 different daily charts in the beginning, all you need to do is then to wait until you find a strong confluence paired with good risk-reward ratios. Just by following this concept and being disciplined with choosing your trades, you already have all the tools you need to beat anything your bank will offer you in terms of return on investment. And the best part is, it will just take you a couple of minutes every day to do so. Once you've gotten more accustomed with the concept on daily charts, you can of course also move down the time frames to find intraday or scalping setups. If you liked this video, please leave me a like and subscribe to the channel. Also leave me a comment on what other trading related things you would like me to talk about. See you again very soon. Happy investing.